AI can be useful for explaining a journal entry, but it should not be the final authority. The accounting team still has to verify the economic event, the accounts, the amounts, and the debit and credit logic. Think of AI as a drafting assistant, not an approving accountant. Start with a controlled prompt. Give the tool a fictional transaction, the reporting basis, and the facts that matter. Avoid confidential customer, vendor, employee, or company information. Ask AI to explain why each account is used, whether the entry is balanced, and what assumptions require confirmation. The result should be treated as a proposed explanation, not as evidence that the entry is correct. Worked example. A fictional company pays $1,200 in cash for 6 months of insurance coverage beginning on April 1. The initial entry is a debit to prepaid insurance for $1,200 and a credit to cash for $1,200. Why? The payment creates a future economic benefit, so it is recorded as an asset rather than an immediate expense. At the end of April, 1 month has been consumed. The adjusting entry is a debit to insurance expense for $200 and a credit to prepaid insurance for $200. 6 months divided into $1,200 equals $200 per month. In both entries, total debits equal total credits. AI might produce a polished explanation, but validation comes first. Compare the proposed accounts with the chart of accounts and the company's accounting policy. Check the date, coverage period, amount, supporting document, and whether the transaction is routine or unusual. Recalculate every number independently. Then ask a qualified reviewer to challenge the reasoning, especially if the entry affects revenue, estimates, taxes, or a material balance. Document the prompt, the AI output, the reviewer's changes, the source documents considered, and the final approval. Use approved tools and protect confidential data. If the facts are incomplete, the output conflicts with policy, or debits and credits do not balance, stop and escalate. The goal is not merely a fluent explanation. The goal is a traceable, accurate journal entry that a human accountant can understand, test, and approve.
Reconciliation compares two records that should explain the same activity, such as a company's cash ledger and bank statement. The goal is not to force one balance to equal the other. It is to explain differences, identify exceptions, and determine what action is supported by evidence. AI can speed the screening, but it must support judgment rather than replace it. Begin with controlled inputs. Import the ledger and bank activity from approved sources. Confirm the period and currency, and protect confidential information. The system may compare dates, amounts, descriptions, and reference numbers. It can propose exact or likely matches and place them in a controlled review queue. A human reviewer must validate and approve clearing each item. Unless the organization has explicitly approved risk-tested, threshold-based auto-clear rules with monitoring and exception review. Here is a worked example. The ledger shows a $2,400 vendor payment dated March 30. The bank statement shows a $2,400 withdrawal dated April 1 with the same reference number. AI proposes a timing difference because the payment was recorded before it cleared the bank. A reviewer checks the invoice, payment authorization, and bank detail. If the evidence agrees, the reviewer approves the match and documents the reason. The March 30 ledger entry remains correct. The difference is explained by the clearing date. Now suppose the bank shows a $780 withdrawal with no ledger match. The AI flags it, but a forensic red flag is an investigation lead, not proof of an error or fraud. The reviewer checks authorized payment records, bank fees, automatic debits, and other support. Missing or contradictory evidence follows the organization's approved escalation path. Human approval is a control, not a formality. Define approval authority, materiality, and aging thresholds. Evidence requirements, override logging, and reviewer independence. Preserve the input, proposal, final disposition, reviewer identity, and timestamp. A reliable process combines clean inputs, transparent rules, human validation, confidentiality controls, documented review, and approved escalation. AI focuses attention. People remain accountable for the books.